Dollar crisis. The world is dumping dollars and buying gold. For decades, the US dollar has been the dominant currency of global trade and finance. Oil, commodities, and international debts have all been priced in dollars, giving the United States unmatched financial power. But recent global shifts suggest that the dollar's reign may be weakening. Across many regions, countries are reducing their dependence on the dollar and increasing their holdings of gold, sparking conversations about a potential dollar crisis. Why the dollar dominated the world after World War II, the U.S. became the world's largest economic power, and the dollar was tied to gold under the Bretton Woods system. Even after the gold standard ended in 1971, the dollar remained the backbone of global trade. Nations trusted it because of America's strong economy, deep financial markets, and political stability. The dollar became the world's reserve currency, meaning central banks held large amounts of it to back their economies. The emerging dollar problem. Today, things are changing. Several factors are making countries reconsider their reliance on the US dollar. 1. Inflation and US debt. The US national debt has reached record highs, and persistent inflation reduces confidence in the dollar's long-term value. 2. Geopolitical sanctions. Nations like Russia, Iran, and even China see how the US uses the dollar system to impose sanctions. They want to reduce their vulnerability by trading in their own currencies or in alternatives like gold. 3. Rise of competing economies. Emerging powers such as China and India are exploring trade agreements in yuan, rupees, or local currencies instead of defaulting to the dollar. 4. De-dollarization trend. Many central banks are diversifying their reserves by buying more gold, reducing exposure to the dollar's potential decline. The gold rush gold has always been viewed as a safe haven asset. Unlike paper currency, it cannot be printed at will. In recent years, central banks across Asia, the Middle East, and even Europe have been buying record amounts of gold. According to the World Gold Council, global central bank gold purchases are at multi-decade highs. Why gold? It holds value in times of inflation. It is free from political control. It has universal acceptance across cultures and borders. This shift indicates that nations are preparing for a world where the dollar may not be as trusted as before. What this means for the world economy. If more countries move away from the dollar, global trade could become fragmented. Instead of a single currency dominating, we may see a multi-currency system where trade is settled in yuan, euros, rupees, or even gold itself. For the U.S., this could mean reduced global influence. The dollar's dominance allows America to borrow cheaply and maintain economic strength. If demand for dollars falls, borrowing could become more expensive, weakening the U.S. economy. For investors, this trend highlights the importance of diversification. Many are following the same path as central banks, buying gold and other tangible assets as protection against currency volatility. Conclusion. The world is not abandoning the dollar overnight, but the movement away from it is real and growing. Gold is emerging as the most trusted alternative in uncertain times. While the dollar may remain important for years to come, its unchallenged dominance is fading. For individuals and nations alike, understanding these shifts is critical to navigating the future of global finance.